talked about last week kind of came to fruition. And right at the moment that Bitcoin is potentially finding support on this inverse 702, which happens to align exactly with the 200-week moving average, as we can see right here. We are dancing right on that line like a bird on a power line. And if we close the weekly candle above this 200-week moving average, that's also the inverse 702. That's pretty good news for the bulls. I mean, it really is. And then you look at the Dow Jones. What did we talk about last week? We talked about this line of resistance. If we break through that line of resistance and claim it as support, that's also very bullish. And then you look at like all the buying pressure the past 3 weeks, actually the past 4 weeks, right? You have this huge candle that comes down respecting the inverse 382 Fibonacci level, just gets bought up like ridiculous for a week. And then the following 3 weeks, you just got buying pressure. It's like the sellers come in, try to push it down, and the buyers are like, nope, nope, nope. And then you break out of key resistance. So now you're finding a bit of resistance at the inverse 236. That might be a battle. We might see some consolidation. But as we talked about last week, the cryptos are kind of telling us a major story here. And if we're trying to figure out why on earth the stock market has upside ahead of it, well, you got to think of innovation. You got to think about what is different here, what is changing, what is a bullish catalyst for these markets. I tend to believe that cryptocurrency actually is holding the keys to the next leg up in the market. It's not necessarily Bitcoin, but it is cryptos like Bond, it's cryptos like TRB that are fundamentally sound projects. They will change the nature of the crypto market. They will lead to widespread adoption in the crypto market. And last week we were down here on Bond, and I'm like, what the hell's going on with Bond? Okay, well now it's way the hell up here. And it's holding. It's finding major support on predictable Fibonacci levels. So that should be pretty encouraging for the bull case here. Obviously, we had to do our homework. You're definitely not throwing darts at any cryptocurrency and just buying based on that. You better have done your homework. You better have made sound investments. Bond clearly showing us that there is liquidity and it's trying to find value. TRB clearly showing us there is liquidity and it's trying to find value. And we're also seeing a lot of respect for Fibonacci lately. We're seeing people literally fulfill the self-fulfilling prophecy of Fibonacci's on all of these local swing highs to these local swing lows. Look at that. That's where I set my sell order. I set it at the 1618. Pinpoint nailed it. And now we're finding support above that 1 fib level on TRB. TRB could start its rip through coin market cap, just like Bond is doing. Bond was like coin market cap like 650 2 weeks ago. Now it's in the top 200. TRB might be making its way. I believe a lot of the strong fundamental crypto projects are now about to box out all of the shit coins. There's a lot of shit coins in the top 100 coin market caps. There's a lot of room for these low cap gems to rip into that top 100. And when they do it, well, their market cap's going to increase. Their value is going to increase. That's how you get in the top 100 market caps, right? So this is what I mean about doing your homework. You got to do your homework and you got to find which projects have sound fundamental value, which projects will contribute to the next leg up in this market if we believe that there is another leg up coming. And it's pretty encouraging when you're seeing the Nasdaq also breaking out of a key resistance line this week. This is the daily chart here, breaking out of a key resistance. This is pretty impressive. Doesn't mean you might not come back down to retest. Same thing with the Dow Jones. Doesn't mean you might not come back down to retest. But it's very encouraging that we're seeing breakouts of key points of resistance. And it's at the same time that Bitcoin might close a weekly candle above the 200-week moving average, which is coinciding with the inverse 702. Lots of confluence here. The other major confluence I like to notice here, 10-year bond yields. Hello, what does that look like? I'm looking at the weekly chart. Does that not look like a head and shoulder reversal structure? And where did the head and shoulder reversal structure kick in? Well, it couldn't close above the 2018 high. That is bad news for bonds. Bonds going down, that means we may be entering a risk-on environment. That means investors are looking into risky assets like the Nasdaq, like Bitcoin. They're not necessarily getting what they want out of bond yields. I mean, bond yields are 2.75%. Why would you buy an asset that yields 2.75% if our inflation number is 9.1%? It stands to reason that market participants are more inclined to take risks in equities if they can't beat inflation buying bonds. Correct? Does that make sense, right? So we could be entering a risk-on period because it's high stakes right now. Inflation is very high. Things cost a lot of money. So you better be looking for those large returns. 2.75 is just not going to cut it on a 10-year yield. Now, if we look at the DXY, quite an interesting situation we've got going on the DXY here. It looks pretty bearish, but we have to acknowledge, where is the DXY finding support? It's finding support at the 702 level. Now, this is the weekly chart. So last week's candle was particularly bearish. It was technically a reversal candle. This week, we got that downside, which coincided with major upside in risky assets. Bitcoin moved up a bunch this week. Ethereum moved up a bunch this week. Dow Jones moved up a bunch this week. And Nasdaq moved up a bunch this week, all as the DXY moved down. Now, the DXY is finding support at the 702. That could mean that maybe this week, potentially a down week, because the DXY might retrace back up to the upside. Hard to say. It's also really hard to say what the Federal Reserve is going to do this week at their meeting when they raise interest rates. I mean, they're going to raise interest rates most likely. We don't know what they're going to raise them to. We also don't know how the market is going to react to it. We can't make the assumption that the market is going to sell off just because the Fed hikes rates. As we've discussed, based on inversion theory, the market likes when the Fed is taking initiative on dealing with inflation. So if the Fed is raising interest rates, that's not necessarily something bad for the market. The market is showing us that it actually is anticipating inflation to come down. That's what the market is showing us when it's breaking out of these key resistance. The market is a forward-looking consciousness, if that makes sense. It's anticipating what we don't necessarily see. So if the market, if the Dow Jones is moving to the upside when the narrative that we're being fed is that, oh, financial nightmares are ahead, well, the market doesn't really look like it believes financial nightmares are ahead. It actually looks like it believes inflation might be getting under control here. That's what you see the past 1, 2, 3, 4, 5, and now 6 weeks. 6 weeks in a row where the market is very resistant to the downside and it's seeing buying pressure. And now that buying pressure has resulted in a major breakout at the same time that you're seeing these little cryptos, these theoretically risky assets, move insanely. So let's talk about NewCipher because I like to talk about it. You know, I bought some NewCipher last week down here. Yeah, I didn't exactly sell this rip because it happened when I was sleeping and I didn't put in a sell order, but that's fine because I'm looking for more upside on NewCipher. I think NewCipher might be gearing up for a rip. I think Bond and TRB are showing us that there is liquidity in these risky assets, but these assets are only risky because people don't understand what they actually do from a utilitarian perspective. That's why I mean it's important that we're doing our homework right now. It's important that we're understanding what we're investing in so that we can have conviction when these assets are way down. How the hell did I have conviction to keep buying Bond all the way from here, right? All the way, I'm buying Bond here, keeps going down, 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 down. I bought all the way down. And now look at me. I'm way in profit. I'm obviously taking profits, though, because you got to protect yourself. You got to hedge on both sides of everything. Definitely taking some profits on bond. But this is very, very positive for the argument that fundamentally sound projects in the crypto space, also in the stock market, will potentially do well if we're entering a bullish phase. If that's a new all-time high in the stock market, or if that's just a retracement in the stock market, there is liquidity in the market. We're starting to see buyers step in a big way. Massive trading volume spikes here in low market cap assets. Pretty positive. So it's kind of a good situation considering everything I said last week, considering everything that happened in the past week. It's pretty good. It's honestly good. Dude. Oh, dude. Kind of excited, honestly, here for potentially a major bottom in these markets. I'm really hoping Bitcoin can close over that 702 level, which is also that 200 weekly moving average. It's crazy that it's dancing on it. Like, it's just right there. It's crazy, but keep an eye, all right? Do your homework. Get prepared, dude, because they're trying to take more than just our money from us. You better realize that. So, good, dude.